welcome to SPAR's podcast. We are going to talk about first-time homebuyers. So I've got Cindy Allen and Stephen Tran with me today. So we're going to have a conversation about first-time homebuyers, what realtors can do to sort of educate, get them to your table, have the conversations. I think we're kind of missing out on some of the conversations. Would you agree?
Absolutely.
Okay.
And I want to first say thank you for having us.
Oh, you are so welcome.
Absolutely.
We love SPAR.
We do.
Excellent.
Yes.
Gotta love hearing that. Yeah. All right. So just going to dive right in. What's kind of the biggest question you get or challenge you're facing when it comes to first-time homebuyers?
So you want to take the lead?
I would say the biggest challenge with the first-time home buyers is really getting them to understand how much they need to know. Mm-hmm. As we were talking about before we got started, most people don't want to come to the office and meet in person, and there's just so much to go over. So I think that that's probably my biggest challenge, is just to get the education piece in there, because everybody's in such a hurry and they, really would rather barely even do a Zoom call now. So
yeah, I definitely say, yep, meeting in person is one of the things that we are definitely lacking nowadays. And the other aspect too is everyone thinks there's just one interest rate for everyone. And so there's a lot of misinformation. If you go to Google, for example, and you were just to look up interest rates, a lot of those things that you see have an origination fee in there. And some people the origination fee is like they charge you 1% of your loan up front. So then that way you can have a lower interest rate. There's so many qualifying factors that come involved to find out what your interest rate is, and everyone's different. So overcoming that part, I would say, is the biggest challenge that we have. And for everyone that's tuning in, 100% find a loan officer that you work really well with, and then have that conversation with your client that we're here just to help and just give guidance.
Well, and another thing, too, that's a bit of a challenge is people think they know their credit scores. There's probably 100...
Credit Karma. I did Credit Karma.
Yep.
Right. Well, and I read once there's about 100 different models for credit scores, and they're all different for insurance and credit cards and bank loans and things like that. So even Experian has a proprietary model for consumers that they sell them, which is not what we wind up with.
Yep.
So that's probably another big misconception.
If I'm a first-time home buyer and I, quote, know my credit score, and I'm thinking, oh, I have a 620, is that good enough? Because what do I really know, right?
Right. You really don't know, but we can fix a lot of things, and oftentimes it doesn't take much. For instance, I had a person one time when we were doing an MHFA loan, and they needed a 640, and they had put their social security number wrong into the application. We got their pay stubs and realized it. We had already pulled the credit report. And so we had to just rerun the credit report. All the information was the same, except that there were two small charge cards with balances. One was like $30 and the other one was $15 or whatever. And he had, in the interim, paid them both off. And that dropped his score below what was required for the program.
Yep.
Which you wouldn't think. You would think that would be a good thing. It's very counterintuitive. So we had to have him. We can go into the credit company and say, what if we did this? What if we did that? He had to go charge a cup of coffee to get his score back up that other 20 points. And the amount of effort it took to get the right documentation for that cup of coffee so the credit bureau would rapidly rescore that fella. It was ridiculous, but that's just how such a small thing can make a big difference. So even if they come in with a 720 credit score, oftentimes we can do an analysis and pop them up quite a bit with very small tweaks.
So the number is really only a small piece of the pie. Of the puzzle.
Yes.
Yeah.
I mean, it's one of the large pieces of the pie, but there's so many, once again, qualifying factors.
Sure.
Right? And so the 620 credit score, like you were saying before, coming in, what if you're at 620 and we are doing a program for a first-time home buyer, for example, that needs that down payment assistance?
Yes.
And let's say to qualify for it, we're at that minimum at that 620, really for like Mahafa, like we were talking about, like 640, 650. Minnesota Housing. Sorry, I said Mahafa. I apologize. Probably abbreviate a little bit better. But if you're at that, let's just say you had your credit score pulled already and that's what it was at, we want to make sure you're at least there and you maintain it. Like Cindy was saying, if you fall out of it, that's not going to help anybody.
Yeah,
right?
it's a big problem.
When we see your credit report, we can kind of give you a heads up. And what we do is if you're at a point where you're at that border, we want to make sure you know, like, you probably want to stay at least at these credit levels. This is how much you want to keep on your card. And like you were saying, one of the biggest, I want to say myths would be everyone thinks that you need to pay off your credit cards and your credit score is going to boost.
Yeah.
Yeah, and I don't know if you've seen this yet, but this is a recent development we've seen just a couple of times here in the recent past, where people have paid off their car and their charge cards, and their credit scores disappear. This is something brand new. I don't know if you've seen that yet.
People with fresher credit.
Yep.
Oh.
So you need to have activity.
You need to carry a little bit of debt.
Right.
just a tiny bit.
Yeah.
And the other thing, as long as we're on the subject of credit, is people will oftentimes want to clean up old collection accounts and things like that.
Yes.
Well, the score is going to be based on the last 2 years' activity, most heavily. So if you had a fight with Comcast 5 years ago and you owe them a couple $100, if you go and pay that, now it's bad new credit.
Oh, boy.
So, there's just weird things like that. And that's
Resurrecting
why
it.
Yeah. It's so important for us to
Wow.
see people early, because those kind of things really, really can make a difference.
So in terms of the score, because I'm sure you hear this, as I've been around realtors for many years now, what's the perfect score, or what's the score I need to qualify, or anything like that? Is there a magic number where you're talking first-time home buyer? If I have A score, is it worse or better than B score? You know what I mean? Is there that pretty magic number?
Yeah. I actually love that conversation.
Do ya?
So for us, like, I just had it in the office this morning at Fairway, and we were just talking to everybody, and we were like, what is a perfect score for us?
Yeah.
And if you're in the upper 600s, that's a good starting point, is how we feel, because that's where you're going to be hitting the minimum requirements for like a conventional mortgage.
Okay.
But also, a perfect score to someone is so much different than another person. So like for us to say, hey, you should wait till you be at like a 660, right? A 660 for you versus someone else could take years.
Sure.
And so does it make sense for us to tell you, hey, you need to be at this credit score so you can buy a home? Because then really like if you need to be in a home for what reasons it may be, if you want to invest, if you want to be in a home and you need to support your family, you need to do all these things where you can't rent, for example, then let's have that conversation. Okay. And Cindy and I are going to help you find where you're at, because that's the part of what we love, what we do at our jobs is, why are you buying the home? Because then it's like, all right, so what's the credit score that we need to get to make that happen?
And too, with the automated underwriting systems, everything comes into play. Income, your debt to income ratios, are you getting a gift? Do you have any money in the bank after closing? So even though the credit score is important, there's so many other things that will go into that automated underwriting.
Sure.
So, if you have very little money and your job is sketchy and you have a 720 credit score, well, we still have to get all the rest of that to fit into the guidelines.
Okay. So
yeah.
we're busting up some myths here. So there's really no perfect score. It's kind of based on every unique person.
Yes.
Right.
Loan officers are not just there to tell you no or yes. They're your friend, your confidant, your guide.
Exactly.
Okay.
100%.
Just as much as your realtor, helping you get to where you need to go.
Right.
I think it's great that you guys touched on, you're going to help their credit scores. You're going to help them, guide them to better credit and give them advice on what they should do or not do. Because to what you both said, some of those things I would think, well, yeah, I want to pay it off. That might be detrimental.
It's not common sense. A lot of
Yeah.
the things that we talk about have no common sense.
Yeah. So, yeah.
Well, the common sense part's hard, because this is stuff that they don't teach you in school.
Right.
Right. And that's the biggest
Exactly.
thing. And like we were talking about before with like the perfect credit score, right? It's hard, because we're going to try to help you once again. Like, we're going to do products. I know, like, we do like what if simulator, Wayfinder, and we're going to pay for products to help you be in a spot to succeed.
Is there a product, or is there a loan product what's the lowest score? Obviously there's all these other factors, but we all know there's going to be buyers out there that are wanting to own, and they're understanding all this maybe misinformation, and they're going to get on Google machine and they're going to say, what's the interest rate and what programs can I get with my 580?
Yeah.
Or, so is there a number so low that there's still hope, right? Mm-hmm. So what is that? Is there still one?
Well, we can do FHA and VA at 580,
Okay.
but it's very difficult to get an approval at 580.
More difficult. Yep.
Yep. So, and 620 for conventional, but, programs will vary too. So you may have a 620 score or maybe even a 640, 660 score. But on conventional loan, it'll make the mortgage insurance enormous.
Sure.
Yes.
And the rate will be higher. Then in that case, well, FHA might work better. So, there's just a lot to consider.
Sure.
Yeah.
But no, you can get an FHA or a VA at 580, 620 for conventional. But getting that machine to say okay is not likely.
Sure.
Contributing factors, right?
Yes, absolutely.
Risks, the risk factors of it all, right?
Risks and rewards.
Yeah. I mean,
but if I've got a 580, I can feel good that I can have that conversation and really start it.
Absolutely.
Yeah.
I'm not going to immediately say, no, I'm sorry.
There's even right now a 540 credit score, 10% FHA.
Okay.
And I mean, that alone, once again, when we say it out loud, that opens a lot of doors for a lot of people. But
Absolutely.
once again, those are the bare requirements. What are the other contributing factors that are in
Right.
there too?
Yeah, because a lot of times if the score is there, there's reasons.
There's reasons.
Yep.
Yep, absolutely.
Yep.
Yep.
But it's not like we can't make a plan for a year from now
right.
and keep up with people and help keep them on track. So, yeah, we never say no. We say when.
When?
Yep.
Yes. It's not no. It's not today, but it could be in 6
Right.
months or a year.
Yes.
Okay, so in order for you to know or to help plan, you're going to have to run their credit. I bet that's a big, oh, please don't do that conversation, right?
Yep.
Okay, so what are you going to say to them about their running their credit?
My conversation piece about running credit is a lot different than most, I feel. A lot of people I talk to is like, do you own a credit card? And they're like, yes. And I'm like, they had to pull your credit to get your credit card too. Why are we pulling your credit? Is it because we're trying to buy you a home? We're trying to find you a home? We're trying to get you that investment property, whatever it may be. We need to know your credit score to be in a spot to actually get you that loan.
Or even advise you what programs will work.
Sure. So there has to be a credit run. Okay, so is there now shop the loan, right?
Yep.
You advise talking to more than just yourself to understand some other products so you don't all offer the exact same product. Are there differences between from two different places? So tell me, do you offer the exact same thing? Do you have differences?
Well, I think there's a big difference between banks, credit unions, and then lenders like us.
Yes.
Because with banks and credit unions, a lot of times they'll have overlays. So, for instance, with FHA, you can go up to about a 57 debt to income ratio. Whether it's advisable or not, it depends on the client. A lot of times people will have overtime income, bonus income. It's not seasoned enough for us to count, but they feel comfortable with that payment at that level.
Okay.
Where there may be, some banks or credit unions or other lenders, I guess, will say, even though FHA allows that, we're not going over 50. So that's kind of an overlay.
Sure.
So I think that's important. But as far as like first-time home buyer money,
Yes.
a lot of lenders don't deal with that. I don't know.
Is it a higher risk? Is that why?
No, it's just a lot more work.
Yes. No, but that's the truth though, right? I mean, that's the full
Right.
transparency. Some lenders don't want to work with the state agencies like the MAHAFAs,
Gotcha.
Minnesota Housing and everything, because there is more work. There is more legwork for it. And sometimes for the margins and how they're ran, it doesn't make sense for them to include that.
Okay.
Right. But for us, once again, what's unique is we do traditional mortgages, and we do some products that we have that are non-traditional mortgages. So traditional mortgages, conventional FHA, VA, USDA, right? And then for us, we still sell them to the same people.
Right.
Up to the secondary market are the exact same people. Jenny, Freddie. I mean, they're the ones that we're going to be selling those to. So we pretty much, if Bay Equity can't do it, I probably
You might
can't do
not
it either. Right? And we're going to try our best. We're going to do everything that we can in our
Okay.
powers to make it work. But we, of course, we do have some specialty products, and I think that's the part of figuring out what is the client's situation and then how we can help.
Okay. So if they do go to one lender and decide, well, I want to talk to somebody else, I didn't like what that person said.
Yeah.
And they're going to be very cautious if you're now the second person they're talking to and you say, okay, well, we have to run your credit. They're going to be defensive.
Yeah.
Because you're running their credit report again.
Right.
Is it a big impact? Should they worry that you're going to be a little bit different?
Well, it depends on how much time has gone by, for one thing. You are allowed to shop for a mortgage.
Yep.
So,
Yep.
there's varying theories on that, but we usually try to get it within 2 weeks of the other lender.
Yep.
And it's not like we can't, if they know what their credit scores are that we're going to be using, it's not like we can't run some numbers based on that,
Yeah.
and just advise them accordingly.
Sure.
But in order to run a pre-approval, do the automated system, we have to have the credit
Do the
scores.
full scan. Yep.
Yep.
Okay.
And a lot of times, too, to see if they're going to qualify for something that the other lender might not be offering them, we probably need to do it.
Sure.
Yeah.
Yeah.
And let's talk about that part, right?
Yeah.
Hard pull, soft pull.
Yes.
Right? Those are
Thank
the kind
you.
of the ones that people know that in the public, right?
Yep.
So that hard pull is that first one usually because we want to know where your credit is, kind of like what you were saying.
Right.
And then you get within that 30 days to get it pulled 5 times on that same credit report, right?
Okay.
So if anything were to change though, you would need to do another hard pull. So that's a little bit of a difference that a lot of people don't talk about. It's a small nuance that not many people know about, right? But if you are shopping around, once again, trying to find the best rate or best closing costs or just finding who you work well with,
Yep.
right?
Right.
Yep.
Right.
It would not negatively impact your credit pull if you were doing soft pulls.
Good to know.
Yeah.
So all things realtors can kind of clue their clients in if they haven't already talked to you. They should always recommend that they talk to a loan officer. So realtors have access to something called down payment resource with their MLS. And it kind of pulls some potential down payment programs based on an address of the home that they're looking to purchase. Is it possible that you wouldn't have those programs?
Well, I want to let's run that back one more time because I think that information right there, not many people know about. No, in all full transparency. So you're telling me if I was a new agent, I can go to MLS, I can look up the address, and it would tell me about programs that they might qualify for. In this
Correct. So it has nothing to do with the person that they're working with. It has everything to do
available
with
to
the address
area.
they're looking at. Yep. So if you're looking at, 123 Front Street, pull that listing up, you hit the down payment resource button. It's going to pull up any and all programs in this system that address sort of connects to different down payments. So it's going to have Minnesota housing, and it's going to list the programs and potential qualifying factors and money available.
Yep.
So the same if there's a particular city program that's running. Years ago, I don't know if it still is, but Dakota County was offering money for people to move into their county, different things like that.
Yep.
So the agent can print it all out and give it to their client and say, go talk to your loan officer about these and ask about these programs.
Yeah.
I'm going to need every real estate agent to write that down.
Yeah.
Thank you.
No, but really, because it's so, for us, it's always like we know kind of the programs, right? The cities have different programs, like you said.
Yes.
The counties have different programs. So when we hear the address, instantly in our minds, because we want to save people money, it's like, all right, these are programs that in our heads are people telling us, like, we can apply for this, we can apply for this, depending on what their financial situation is,
Right.
So definitely a little different than the MLS. I
Yes.
feel like it's for us, it's kind of like the whole knowledge part. But I love people telling me about programs.
So someone saying, my agent said I
Yeah.
should ask you about this program, Stephen. And you're going to say, great, let's see if we can get you that money.
100%.
Yes.
Okay.
And there will be many,
Yeah.
many, many lenders that don't have those programs.
Sure. Okay.
Yeah. Or
Okay.
don't have access to them or have
Some of those specialty ones.
Well, and they all have different little nuances and rules and income, so, and really what's been cool is, and I probably haven't seen free money in probably 25 years, but some of this is forgivable now.
Yep.
Yes.
And it's big numbers.
Big numbers.
Yeah. Yeah. And you don't always have to be a first time home buyer.
Right. Okay.
So-
So big question. What is a first time home buyer? There's language there, right?
Haven't owned in 3 years.
3 years. That's the magic number.
Right.
Yep.
So I could have owned before, rented, and now I can do it all over again. Get all that money all over again.
Yeah,
But you can't have the first generation money.
Right.
yeah, I was gonna say the first generation money.
Right.
Once again, first generation, not saying like you're born first generation American citizen, right? It's first generation of homeownership is
Right.
what we're talking about.
So nobody in my family has ever owned. I could do that program for that money.
Right.
Yep.
Okay.
Yep.
So 3 years is the magic number. So if anything bad happened in your past, bankruptcy, foreclosure, there's hope you can start over again.
Yes.
Absolutely.
Yeah.
And in some programs, I would like to say most programs, if one of the buyers hasn't owned a home, you guys could be considered first-time home buyers.
Well, that's exciting news.
Yeah. So it just depends, once again, on the program.
Yeah, yeah.
I know Cindy's looking at me like, ooh, I don't know if you should have said that one. But once again, depends on the program, right?
There's always rules to everything and exceptions to every rule.
Yes, exactly.
Yes.
Okay, so keeping with our first-time home buyers, what is the average down payment they should be looking to have?
Well,
Like a percentage?
MHFA is $1,000.
Okay.
That's what you need for MHFA.
That's not
there's
much.
some other, there's some other
Yeah.
programs that's what you need. If you're a veteran, zero down. If you're doing rural housing, zero down.
Yep.
Yeah, so it's very little entry cost for many, many people.
Okay. So I've got my credit. I'm working on it. I've saved $1,000. I could potentially just own a home
Right?
where I didn't think I could before.
I know. Isn't it crazy?
That's-
that
Yeah.
nobody knows
That's
this.
insane. Yes.
Yep.
Yeah, it is.
And that down payment money goes towards closing costs too.
Yes.
Another conversation piece that we haven't touched a lot on about is with being a first-time home buyer, most people, and I don't know, maybe you have the same conversation, all we talk about right away is down payment, and we
Yes.
don't talk about closing costs at all. And those are a percent, usually like almost 3 to 4% of
Right.
the purchase price that you kind of think about. And with that MHFA, that Minnesota Housing Program, that can go towards your closing costs as well.
So that there's a gold mine right there. So we can do the $1,000 down. That gets us the loan
But you're going to have a second mortgage of up to $18,000.
to close on the property, to
Right.
get the keys.
Yep.
Yeah.
And that's probably the piece that a lot of first-time buyers maybe struggle with
Yes.
if they're not familiar with money such as Minnesota housing.
Yeah.
Okay.
And you
So
may or may
that's-
not have a payment on it. Depends on your income
Sure.
with MHFA. So.
Okay. And so, Stephen, you said it's about 3 to 4% of the purchase price. That's pretty standard.
Yep.
So, people looking and thinking, they can start to do the math themselves. I know people
Yeah.
don't like to ask questions. It's embarrassing. Do I have enough money? So it's always good. They can kind of do the math themselves to get started. Is there any limits on source of funds if they need help with either down payment or closing costs? Any of that money?
Source of funds, I like. I love how you said that. So source of funds, let's talk about what that really is, right? So source of funds is checking, savings, your 401k, stuff that's liquid assets
Okay.
that you have, right? It can also actually be from a gift too, but that $1,000 actually needs to come from your own liquid assets,
Right.
Okay.
right? And
Well, and then you can also take out a loan against an asset. So if you had a car that you owned free and clear, you could take a loan against your car as long as you qualified for the payment. So if you have a hard asset, you can borrow money against it.
Oh, okay.
Like a 401k, you can borrow against your 401k. There have been times when we've refinanced people's car to get some money out for them to buy their home. And then if we can take it out for a little longer time, they can always pay more if they want. But just to get the qualifying right, there's just so many things that we can do.
That's what I'm gathering. You guys are like magic makers. Like, what's your issue?
Yeah.
Let's fix it. Let me find you all the money. Okay.
it's the best part about our jobs is being creative. And I think that's what really separates who you want to work with is the people that are going to, once again, it's not we're going to say no, it's going to be when, right? And then we're going to come up with a bunch of ideas that, let's just say if we need a co-bar or we need to do some of these other things, does this make sense to us?
Yeah.
I think the beauty of meeting with folks like you versus maybe shopping, the internet mortgage world is I have somebody I can call
I like how
and
you did
ask
that.
the questions.
I like how you did that.
Yes.
That was good. That was good.
we
There is an internet mortgage world.
Yeah,
there
there
is.
is.
And there
There
are
is.
people that like to just, anonymously try and qualify for some money.
But you know what? Whatever you see for the rate, it's not what you're
Yeah.
going to get. So
Right.
there you go.
Yeah. Yeah. I mean, full
Insider
transparency.
Right, right.
So working with folks like you, I can tell you all my problems because you're my new financial counselor and you can help me through it, right?
Absolutely.
Okay. All right. Is there a tax credit for first-time buyers?
MCC.
No?
Well, I checked with MHFA. They don't have that right now.
They're out right now for MCCs?
Yeah.
Oh, wow.
You can have a little bit more tax deductibility,
Okay.
and there's been some pending legislation for $15,000 tax credit for first-time home buyers, but it's going nowhere. It started in 2021, and they still haven't passed it. So
Yeah.
It's not there yet. Okay.
We're almost there.
All right.
There are, what we're talking about, if you own a home and you get some tax credits and everything, like homestead and everything, there's tax benefits for owning a
That's
home.
true.
Too.
Yeah, homestead.
right,
Yep.
you can take your interest in addition to your standard deduction. So
Okay. All right. What other kind of nuggets do you got for me? What should a realtor know or pass along to educate their client?
well, I think you brought up a good question when you sent questions for us to
Yeah.
think about, is what can a realtor do because the rates have increased so much?
Yes.
How can they help people be more comfortable or be able to qualify? So there's a number of things. You could do a 2-1 buy down if it's payment comfort for people. So what that means is that, if rates are at 6.5, they're going to start at 4.5.
Okay.
And then the first year they'll pay 4.5, second year they'll pay 5.5, and then 6.5 from there going forward. And the money is just escrowed at closing. Now the trouble with it right now is the seller has to fund it, and we're having a little bit of trouble getting seller paid closing costs. But for the comfort of the buyer, they may be early in their career, daycare may be coming to an end. There may be things in their lives that are going to make that 6.5 okay in a couple of years.
Yes.
Where right now it's not.
Okay.
If it's not so much a comfort thing, like we talked a little bit about before, how people may have overtime that we can't count, that sort of thing. Well, if a year has gone by and they're still working overtime, it might be countable. So, you really have to update the whole thing if it's not a comfort thing.
Okay.
Where, maybe their credit score is better, maybe they've got more money in the bank, maybe they can get a gift, maybe they can get a cosigner. There's just a lot of things that could work even though rates have gone up.
So they need someone like you to help them through that process.
Yeah, absolutely.
Yeah.
What about you?
I honestly love that. 100% agree. And something else that I wish we would talk more about too is the qualifying part, right? If the
Yeah.
interest rates is affecting us, is it because of that monthly payment changed, right? Is the debt to income a little too much? There's so many things that we could do. So for the realtor, what I would highly recommend is, let's just say it's the monthly payment, right? Or it's how much funds they need to close on the house. What I would do with a lot of my referral partners is that we roll the closing cost to the purchase price, and then ask that if we do that, could the sellers essentially pay that closing cost to our buyers?
So you're kind of looking at seller contributions in the purchase contract.
Yep.
Okay.
Yep.
And the seller, they don't really care what the price is as long as the net proceeds.
If they're still
come
getting the
out.
same net. Yep. Okay.
Yeah, exactly. So if the net's right, and that helps a lot. And as long as your buyer's okay, knowing that the monthly payment is going to change a little bit, it'll increase a little bit, right? But at the same time, their funds that they need to close has significantly came down.
Gone down. Sure.
Helps.
Okay.
And
you've sort of spread that money out over the future.
Yep.
Okay.
And those also with Mahafas, those MHFAs, that's still an option too.
Okay.
Right, so that's something to think about too. So you don't have to do the whole 16.5 or the whole 18,000 monthly payments, right? You can change it up where then you can do those conversations. So for realtors, appraisal gaps are coming back once again. I feel like the market, even though the interest rates have came up a little bit, we're still in a spot that in the summertime the market's booming. So inventory comes up, we're going to be in a spot once again that people are offering. There's stories and experiences that I personally had the other weekend. We were in multiples with 100 people.
Oh boy.
Right.
Okay.
I mean, we won thanks to a fact that we were really communicative and we worked with the listing agent to make sure we could succeed. But it's with the realtor too, having to know how to make you look different than everybody else.
Sure.
And with realtors, it's having that conversation with talking to the listing agent. We have to be creative. We got to be different than everybody else and know that we're here to help our clients and we're going to do whatever it takes to help our clients.
Okay.
So,
And so you talked about, kind of rolling that into the purchase price to help the buyer out.
yep.
And bringing in, that kind of brings in my question on the appraisal gap. So if we're going to up it, it might not be very much. So it might not be a big issue. Got any advice for those appraisal gaps in your world?
You know, the appraisal gap conversation, it's one of those things, because when we have that conversation of appraisal gaps, right? If your appraisal, let's just say the house is $350,000, and then we went up to about $380,000, and we had an appraisal gap there.
Yep.
That $30,000 difference that we were talking about before needs to come from us if we agreed on an appraisal gap.
Okay.
You know,
In cash.
Sure.
Right.
And so then but here's the thing, like what Cindy was saying, having people being creative, knowing that, let's say you have that asset of a car, right? And knowing that you can go against it, and the 401k. For the most part, I'm a strong believer of, like when we were talking about DTI earlier, people that are new, debt to income ratio, right? I don't like pushing my clients to a point where they're at that high point. You know, to me, that's the worst spot to be in, because you're money poor. I mean, house poor is what we call it, right?
Yes.
So to be in a spot where, like, we're kind of in that middle part, depending on what they agree on and what works for them,
Right.
that appraisal gap conversation could probably be more of a conversation, because they might have those reserved funds that we didn't want to touch.
Yeah.
You know, so once again, it comes with the double-edged sword. If you're going to do an appraisal gap, you have to remember, like, the stipulation of it is, if that appraisal does come low, you have agreed that you're going to pay for
You're
that
going to pay
cash.
for it. Yep. Okay. All right. Any other advice for realtors? Getting the clients to you?
Well, I don't know. I know it's a lot of agents don't want to come across as pushy.
Yeah.
You know, so it's a little bit tough to get too aggressive about it.
Yep.
But it's so important.
But understanding the value that you bring as that financial counselor, planner, really you're there not to make the process difficult, but to make it easier.
Yes.
To work with both the buyer and the realtor on getting the person in the home. That's everybody's goal, right? So I think maybe that's the piece, the takeaway here. Education, and the loan officer is your friend.
Yes.
It's everybody's friend.
Well, and
Yes.
I think too, another important part for agents who are getting offers is you got to call and talk to the loan officer. You know, pre-approval means different things to different people.
Yes.
Yep.
You know, and I think you know, if there's any weird income or anything like that, it's got to go in front of an underwriter before a pre-approval is issued. But not everyone works that way.
Right.
And so you want to kind of drill that loan officer to make sure that these things have already happened.
Yes. I've heard terms of pre-qualified and pre-approval.
Right. And people
And
mix them up.
Some people think they're the same, and
Yep.
then for others
Yep.
it's different. And it's was that full report run? Do we really know, is this buyer going to get money, essentially, right?
Yeah.
Because until you do that from your guys' seat, it's really just a talking qualification.
Well, and as a buyer's agent, I think having a local lender who's been around, other
Sure.
listing agents know, you know, because your name has been in the community for a
Yes.
long time. I think that's super important, and also being available after hours.
Oh, yeah.
You know, so when there are a lot of entities that, you know, people feel super loyal to, maybe their bank or their credit union, but if there's multiple offers at 7:00 on a Saturday night, your chances are just so much better if it's a strong lender in the community.
Oh, definitely. I think from my own personal experience, having somebody I can call as a buyer, having someone that my listing agent could talk to when
Yes.
things went awry, close to closing.
Yeah.
If there's nobody to call or talk to, or if it's 7 different people because it's just an 800 number that you're trying to get some answers,
Yep.
that becomes more difficult of a process.
Yeah,
And it
much
might,
more.
and for a first-time home buyer, that's really a tough road to navigate if you don't have someone in your corner.
Right.
You know,
Yes.
so.
It's stressful enough even when things go well for someone who's never been through it
Oh,
before.
yeah. Largest purchase, most paperwork I've ever signed.
Yeah.
Really.
Yes. Stressful is an understatement.
Well, and then we can't forget too that rates are high. Well, not comparatively.
Right.
Over
Yeah.
the last
Across the
25
Yeah,
years.
yeah.
I have an old rate sheet from 1988, and it was 11 7/8 with 2 points. So that's how. I mean, it's much better now than
Yes.
it was. But you know, if rates come down too, we can always refinance if it makes sense.
sure, this isn't the end all be all.
Right, exactly.
This is getting you in the house.
At some point, the
Yeah.
economy is going to tank, and the rates are going to come down, and that's when we pounce on the refi.
You're so cheery, Cindy.
Yes, I know. Well, it'll happen at some point.
It always does, right? It's not like
Yeah.
it's anything
Cyclical,
new.
right.
Yeah,
Yes.
yeah.
A roller coaster of rates. All right. Well, I want to thank you both again for coming in and talking to us about first-time home buyers.
Yeah, thanks for having us.
Really
Yes.
helping to educate not only our realtor members, but their buyers and their clients too. Right. So again, thank you so much for coming in. And is there any last words you want to say?
Stephen Tran, Fairway Mortgage. Nice to meet all y'all once again. If you need
Allen
anything,
Bay Equity Home Loans.
yeah,
Perfect.
we're here to
Yes.
help. And once again, we love SPAR.
Yeah,
right?
we
Doing
do.
these things. If you have any questions, seriously,
Yeah,
reach out to
yeah.
us.
It's so nice. We feel so welcome here.
Good.
Yeah.
Good. Well, thank you both for coming again.
All
Thank
right.
you, Kim Parker. You're the best. Kristen K. Parker, KP. Thank you, SPAR.
Awesome.